do it.
Oh my God. All right. What is going on, Discord family? And welcome back. Oh, that's too loud. Welcome back to another edition of Market Review with me, T.Hobbs. Today's date is January 8th, 2025, year of our Lord. And yeah, the market was doing some market shit today. So we're going to go over it. We're going to talk about the E-mini Dow. We'll talk about the ES. We're going to talk about the NASDAQ, and we're going to talk about the volatility index. Now, before I go into my pre-market plan, I wanted to discuss the daily candle setup, right? So we were looking at the daily candle this morning, and I told the Discord, I said, hey, we just broke these lows right here. We got, the market's closed tomorrow. We got FOMC minutes this week. I mean, this evening. Probably expect some consolidation, right? Like probably get that first downside move and then just consolidate the whole day. Well, spot on the day, because that was essentially what we got, right? We just basically consolidated at these lows all day long, which in the grand scheme of things is bullish, right? But I'm hoping that it's not bullish enough to take the ultimate highs. But what was my plan on the day? My plan was that I identified that conditions were marked down phase, right? Inside of a range. We were bullish as long as we stayed above 42,653, which we barely did, right? Like we broke it and then popped right back up. So the bulls swept it, which is good on the overall macro. They closed below it, which again is good on the overall macro for the bears, but the bulls were able to hold court in this area, but not break the high. So bears still in control, but the market is in balance, okay? We were bearish as long as we stayed below 43,212, which is what we did, which is previous day high. We did that. And then my macro was the battle for the November 4th low continues between the buyers and sellers. That's this 276 level here. We are in the middle of the macro range, but the bears defended the head and shoulders pattern and look primed to make a new low below 42,653, which they did accomplish that. I was just looking for a whole lot more. I'll talk about that here in a second. But if they can get below this level, I am confident we will look to finally break the 42,276 low. I was wrong, right? For bulls to take back over, I need to see us trade back above the NWOG at 43,381. We never got that. So for my opinion, this is just a basing candle that did not bring a new high. It didn't bring a new low, but it's a basing candle by very nature. It does that, right? But ultimately, a basing candle inside of a bearish trend is still very, very bearish, okay? So what was I looking to do? Well, essentially, if we don't come to any of these higher time frame areas, i.e. 4-hour demand or this NWOG here, then I'm looking to just trade inside of the chessboard or the range. The high was 42,980 through 42,848. The low was 42,767 through 42,653, right? And you can see all the market did was just bounce between the high and the low all day long. After sweeping the low, we found buyers immediately pushing back up. As we take the pre-market plan off, because again, none of these other levels hit, I'm going to leave them there for tomorrow or Friday, because I'm thinking that plan will probably work out either tonight or going into Friday. The plan is still good, especially if the levels haven't hit yet. So let's come down to the 15-minute and let's kind of discuss what price was going through, right, on the lower time frame. So this morning, the 550 macro brought us up into the high. I actually took a short off the daily fib up here. I got short targeting these lows down here on the ADR at 387. We never got down that far. I ended up taking profit at the 4-hour support at 719. Basically took the exact same trade, just at a lower level later on in the day, right? And I'll explain that here in a second. But essentially, the market came up, the 550 low, we got a nice drop, broke down, put in the left shoulder, broke the highs, which you get that flip. Now you're anticipating the market pushing back up at some point. I was just expecting a much stronger sweep to the downside, not gonna lie, maybe into this level right here. But anyway, we created the head of the inverse head and shoulders. We pushed back above the high again, right? Pushing back down to complete the right shoulder and then pushing back up and taking out these highs. We're slowly inside of an uptrend on the 15-minute chart. However, as I showed you on the higher time frames, we're just not breaking out, right? Which tells me that we're just balancing out down here, potentially looking to take those lows, right? So if we go down to the 1 minute and I turn macro time on, let's analyze what price did inside of the macros, right? Again, I live by the thesis that market structure is 100% in control of the market, but time sets the appointment as to when you should be looking to get into the trade, right? Doesn't mean you can only trade around time. You don't just, only focus on time, but time, if you're having trouble timing when the market is going to move, if you learn macro time, right? If you learn how the market moves around these time frames, then you could get much more precision type entries, right? So we traded up into 929.30. We traded down, right, back into 930. So when I saw this trade down, I was already out of my trade. Actually, I was out of my trade from the short up here, right? We came back up here. There was another short opportunity. I passed on the short opportunity because my thought process was if we traded down into 930, then I probably should be looking along the market. I ignored that thesis anyway and ended up taking shorts, right, at the 4-hour support area here. My thought process here was break and retest off the low of the range, which is what we got, but we didn't really trade away from this, right? So I shorted it down here, got out at these lows, and then I took another short up here, and that was the mistake of the day, right? I ended up giving back a ton of profit on the day. I'm in an Apex Combine account. I gave back a ton of profit, and I took a loss of like 3,000 or 2,000 or something like that. Well, once I got my bearings back together and was like, okay, next time you're up 100 points, maybe take the profit, right? I ended up re-shorting the market up here at 820. And I apologize, my stuff is kind of choppy. I think I need to clean up my computer. But anyway, I took the market short again at 820. Again, I was targeting this big target, but this time I was smart enough to say, okay, if we're not going to break the low, let me just take everything off down here. Ended up getting all my money back on the short opportunity, right? And finished the day pretty green. But anyway, if we're looking at macro time, we traded down into 950, traded back up into 1010, down into 1025, all the way back up into 1050. Again, just dancing around the PM session high from yesterday, the PM session low, traded up into 245, 250, traded back down, right back to the same level. Like, guys, when I tell you this was probably the easiest day I've witnessed to trade, right? It was very, very textbook. The only thing for me that made it difficult was just me. I made it difficult because I was looking for much larger targets inside of the range. But once I figured, like, okay, we just gonna stay in this range, I just started targeting the lows because I was more bearish than I was bullish. But it was awesome opportunity to play the market both ways. You could have played it long, you could have played it short. Just make sure you understood what the dealing range was, right? And it looks like the low was made of the PM session inside of 1 p.m. maybe, right? And let's see if the market closes above this high. I'll come back and check it later to see what happens. But ultimately, it was pretty cut and dry. And it was like that on all instruments. But if we're looking at what was accomplished, the bears did break down and make a new low. However, if we zoom out to like the 1 hour, right, we're in a major consolidation. And right now, the ball is in the court of the bulls, because down here we have an inverse head and shoulder, right? We got a head, a shoulder, right? But then up here we have a head and shoulders, right? Here, and then here, right? That means the market is in balance, right? When you have an inverse head and shoulders and a head and shoulders, it doesn't mean a reversal is happening either way. It means the market is not gonna fucking move until one of these levels break and we get continuation, right? So just pay attention to that, because whatever the market is doing on this higher time frame, if you come all the way back down to the 15 minute again, you can see we did the same thing, right? We're not breaking the high, we're not breaking the low. Once it's established, dealing range is established, we're not breaking any further. So what does that mean for your trading? It means that you need to adjust your targets to fit the dealing range. If that means, hey, I want to make $2,000, okay, up your size, right? But manage your risk, right? Understanding that the dealing range, until further notice, every time we're probably going to get this one move to start the day, and then we just been consolidating throughout the whole day. It's because that's exactly what the market is doing on the higher time frame as well. I know Justin was talking about the participation is very, very low. If you're just looking at the book map chart, right? Like if you're looking at the book map indicator, you can just see the amount of buyers and sellers at these levels on the S&P 500 are diminishing. They're getting lower. So my thesis is that the market It's coming off a holiday, and then we got the inauguration coming up. There's a lot of uncertainty around what the new president, no matter who he or she is, what the new president wants to do. So until those guidelines are truly defined, big money may be kind of staying out, still in, obviously, they're always in, but maybe they're staying out until they get something a little bit more definitive. That's just my thesis, right? Looking at the S&P 500, like I said, I'm not going to go over too much, but our chessboard held. You can see inside of 2 o'clock, we tapped right up, back up to 59.72 and came right the fuck back down to the lows, right? Now we're back at the lows and looking to try to go right back up. If you guys need help, or if you're interested in learning how to trade or how I trade the chessboard, I made it up. It's a thesis that's based on time, but also based on structure. I made it up. And if you guys are looking to get more information on it, please don't hesitate to hit me up inside the Discord, right? And I'll definitely take some time aside to help you guys out. That being said, I mean, there really ain't much to talk about. The NASDAQ did the same shit. It was boring, right? The last thing I'll leave you guys with is the volatility index, just the information that we talked about this morning. The volatility index is doing the exact same thing as the stock market, right? If we look at the market on the VIX, as long as the VIX stays below this high right here, right, this middle one, right, we're going to stay range bound. But if we zoom out, right, and look at the daily, as long as we stay below these or above these lows, we're going to stay range bound right here. Right? So the market's just literally dibbling and dabbling in between these highs and these lows. I don't know which one is going to break. I'm praying it's to the upside because that would mean the market's going to get bearish. The volatility continues. We don't just grind all the way up like really, really slow. I hate that price action, but I'll trade it anyway. But right now, it looks like like I said, the ball is in the court of the bulls because we're back at the top of that range. So the VIX is probably going to look to come back down here, which means that the market probably is going to be looking to climb a little bit higher. I'm hoping it gets rejected, you know, and the VIX goes the other way, but I don't really have any faith because every time the bulls have had the opportunity to defend anything this year, they've definitely met the challenge. So that being said, this is the market review. Like I said, guys, if you need more assistance, if you're struggling inside the Discord, you don't have to struggle alone. Come and tap in with us when we're trading live in the VC, or when we're just hanging out in the stock VC or in the barber talk or whatever. Let us know what your struggles are. Let us know if we can help you. That being said, my name is T.Hobbs. This is the Market Review. We'll catch you on the next one, man. Peace.